Hello, everyone. How is everyone doing today? Good morning, good morning, Mark. We got the Crude hitting a key area. Sterling putting the news in. Hey, Sterling, sorry I couldn't give you a call yesterday. I had technical issues and internet issues I had to deal with, and it was a little busy with the markets. So, uh, I can try. I don't know. Let me know in the chat if today or tomorrow's better, because today might be your day off. So don't want to interrupt you on your day off. So what else do we have going on here? Sorry to bother everybody else with that information. Yeah, Intel's down. Manufacturing business suffered setback after tests with Broadcom failed. Intel's going to get to that stock price where it's getting to that price fundamentally where just their assets are worth more. I'm not saying buy the stock. There will be a buy again at some point. But there's no solid bottoming fund formation yet. So I think they need to get rid of their CEO too. What else? What else do we have going on here? Oh, good. Another UBS raises Apple price to 236 from 190. Right ahead of the Apple event. Good morning, by the way, Sterling. Thank you for taking the time to put the news in here. NVDA getting shellacked. I mean, NVIDIA was getting sold pretty hard yesterday. And then after the close, you get the announcement with the DOJ subpoena. So I wonder how many people knew about that. Exiting early. Probably Nancy Pelosi, huh? Getting out of the rest of her NVIDIA stock. Like, oh, crap. They're good. I heard that they're going to get subpoenaed. Let me get out. So I bet you there was no front running by government officials in that one. Oh, what a world we live in. So what else do we have? Oil may rebound near 80 if OPEC defends price range. Hey, good morning, Patrick. How are you doing? Where in the world are you? Where on the road are you? What else do we have? Only 1 in 3 millionaires feel wealthy, and nearly half say financial planning needs improvement. Yeah, that makes even rich people feel poor. You should see the amount of high-end cars at the Walmart in Scottsdale. They've been steadily increasing. High-end cars. Yesterday there was, and I used to never see. I've shopped at Walmart. I've shopped at Walmart when I lived here before. And there's rarely high-end cars. Now there's like Maserati parked there yesterday with people who you wouldn't normally see walking into a Walmart or walking into a Walmart. Tomorrow or Friday. Thank you. I'll do that. You enjoy your day off. Good morning, Jacob. Intel has become another poster child like Cisco for why holding forever doesn't always work out. It's trading below it closes. Yeah. Good morning, Royal Palms. So maybe we'll take a look at that Intel chart. Buy and hold. Overall, the market will go up, but individual stocks do not need to go up and can remain in the dumpster for a very long time. Once Intel cancels its dividend and could not sustain that mid 25 area, that's it. That was it. Forget it. Let it go. Let it go, from my perspective. All right, we had the mortgage applications up a bit with the lowering rates down to 6.43. Mortgage applications up a bit. What else? We got Redbook. Did Redbook should have come out. Where's my Redbook number? I don't know where it is. Let me check something here. Just hit this. Sometimes that resets it. If somebody has a Redbook numbers, could you let me know? Jolt's job openings, actually do pay attention to that at 10 Eastern. Factory orders, also 10 Eastern. And then the Fed's Beige Book, interesting reading, coming out at 2 Eastern time. And then remember, the ISM services numbers. ISM manufacturing was horrible yesterday. Horrible. I told you to pay attention to subcomponents. And just to recap, I mean, the manufacturing PMI was still at the 47, but look at this. Employment got a little bump, but that's still in contraction. Where are the other ones? Where are the other ones? Prices. Look at this. Now, this generally lags the CPI by about 8 months, but this is climbing. Prices, so you might be seeing, this is what I think, we're going to see another bounce, not like to 9%, but we're going to see another bounce of sticky inflation. New orders down and prices up. What does that sound like with employment down? Sounds like very stagflationary to me from a manufacturing point of view. So keep an eye on that. That's why I said look at the subcomponents. So we're going to be looking tomorrow at the subcomponents for the ISM numbers, also the services numbers. Map this morning. Let me just do a refresh here. Come on. The market map this morning. AMD's up, but there's your Intel, down 2.5%. Still a pretty across the board, very weak market. Also, yesterday the volume stepped up with the selling. Finally, all the volume has been on over the past even couple months has been on downside days. All the major volume coming in. Technology leading it down today. Comm services, utilities, the only thing that's up. Fed watch dropping, slightly raising probabilities on the 50 basis point cut, but still favoring the 25. I think that there'd be some market carnage if they cut 50. It's like, all right, well, you went from a pause instead of cutting in July at 25, cutting in September 25. Now it'd be a 50 in September to kick off the cuts. Oof. Back out of greed, back to neutral mode. So that's where that says. By the way, Dollar Tree earnings this morning, that was another unmitigated disaster. Gapping down bigly on that. Gapping down bigly. After the close, not much. Hewlett Packard, Enterprise, AI. Tomorrow morning, nothing really. NIO. But remember, tomorrow after close is Broadcom. So, what is this? Yeah, they're gonna keep pushing that. They're gonna keep pushing that. Coco says the markets will end green. I don't necessarily disagree with that. They could get a little bounce today. They're against a very key. We closed. See, I didn't expect this all to happen yesterday. We broke below the lows I talked about yesterday and closed below them. So now I'm watching for. I'm really watching for any bounce plays. I'm watching for rollover plays. Since we did tick off that 87.5 in the S&P, we're now trading against the 50 EMA and a pretty key little other support area. So you had prior support back in June, becoming resistance at the end of July, now retesting it as a support level. So would I be shocked to see a bounce here? Not at all. If we do start breaking this 5,500 mark, my next major target, because we're into a clear path move, my next major target is 53.95. 53.95. And here's what I'm talking about yesterday with the volume picking up. It's not like the volume at the major sell-off going into the lows of August 5th, but it's starting to pick up substantially. This is the highest volume day since what? Back in Thursday the 8th, where we started the big bounce. This was the highest volume day on the bounce back up, but we almost surpassed that with yesterday's price action to the downside. And you can see, if you look here, the big selling days way outpaced the buying days. It's been buying with very thin markets. Good morning, Richard. Dollar Tree cut guidance for full year adjusted EPS to a range of 520 to 560, down 20% of the midpoint from prior guidance of 650 to 7. Yeah, they're down. Let's just, there you go. I mean, look at this. Look at this. Finally hitting that 87.5 again on a gap. So it's actually gapping below that. But this is approaching the lows from when everything was closed with shutdowns and lockdowns. Look at that. Another thing, round trip. That is ugly. NASDAQ. So the NASDAQ took out those Thursday's lows and closed below it yesterday. My key support level, again, I'll be watching for on any rallies for rollover plays. We had a prior resistance area here at the end of July, retested with support on the gap open from last Thursday, and then we took out that low yesterday and closed below it and closed below the key support. So on any bounce, 19,217 is very key for me. First level of support that I'm really looking for is around this 18,688. Even after a bounce, my longer term stuff, I will be watching more for around this 18,353 and another reconnection with the 200. It's already chipped away at the 200. We start chipping away at this more, we could turn this into a very interesting market in September to potentially the downside. Remember, even into beginning of October, so I've talked about before, from my hedging perspective, I keep looking for hedges or keep hedges on or in place pretty much through options expiration of October. That's historically when I found if you have a bad and bloody September through about the third week of October, after that it starts generally trying to recover. So that's what I'm watching for. Again, on the S&P, on any bounce, let me just go back to about this 55.65, 55.67 is very key resistance. Okay? So do keep that in mind too, because the pressure's coming into the downside. Now, keep this also in perspective. Everybody's talking about yesterday being a bloodbath. We still have a massive double top with the lows from the 5th in place. But if you look overall, look at this. I mean, this is where people cry, it's a bloodbath, it's a bloodbath. This was at least a pullback correction. What do you see here? This market. This is a bloodbath? This is not a bloodbath. We need a pullback. Geez, everything's a bloodbath now. I'm surprised we're not back to calling for like emergency 100 basis point cuts. Dow, this is the bigger weekly. It's now returning to, not saying it can't go lower. I think it should go lower. The market valuations are nosebleed territory. But with the amount of panic, look, you're still at the breakout point from back. You had highs at the beginning of August, and we just returned to the highs at the beginning of August. That is not a bloodbath. Dow holding the bottom rotation zone and very, very key support right here. This is actually a pretty significant level. So I'm paying very close attention to 40,825 area. We break below there, it's a pretty quick trip to possibly about 40,400. Still, we'll be watching for some bounce plays in the Dow, but then rollover plays again. The only thing, and you can do this with the other markets based off the pullback, but the only thing in the Dow that would get me again into short-term bullish mode is it falls through with a daily close about 41,370. Other than that, I'm watching for rollover plays. Russell, pretty much again. Now was again, since it doesn't count as an official trigger of a double until the close, the only way this could have been done was momentum. So if you're waiting for a close, this trade would have been, as I talk about, not every setup is a trade. If you're waiting for the close, this would have been a trade that you couldn't take advantage of. If you took advantage of intraday momentum in the Russell, you could have then said, okay, and remember I said this best target for me was the second level, which we pretty much was the low yesterday. Why? Because that's also the 50 area. Now we're waiting momentum going into this low. If we do continue lower, again, would not be surprised at some kind of bounce. The next target area for me is 2121 and then 2089. So you think the IWM will shine after Fed's cuts? It's got to. Eventually it will, Rich. It might bounce for a couple days because people, it's bullish, but the Fed, in order for the Russell to really get out of its doldrums, the Fed's got a lot more cutting to do. So, and also remember, because we have the, where is it? The QQQIWM. Still expecting this to continue to roll over. This is a lot of unwinding to do. So on a relative basis, I expect the IWM to outperform the QQQ, but that doesn't mean they both can't drop. That's why I said it's a nice, from my viewpoint, it's a really nice pair trade for a longer term. Longer term pair trade where the Russell can outperform the NASDAQ, but remember they can both go down. VIX shot up yesterday. Once it passed that 17 and went through 1750, I went, okay, that was the key stuff. Now, is it elevated like from the 5th of month? No. Key I'm watching is yesterday's high in terms of the VIX. If we start dropping below yesterday's high, I'll start watching more so for that bounce. DAX, closing still in the rotation zone, but with this, I'll be watching for bounces in the DAX, but then with cycles going down, more rollover plays. Let's just look at the yield. The yield, really not a ton of movement. Not a ton of movement yesterday. Still just caught in the range. Yield's dropping a bit, but this is interesting. Yield's dropping a bit, but this looks like it's trying to form a base now and possibly on the 10-year break to higher yields. So oh boy, what word am I looking for? The bond traders, are they looking to start to say, okay, inflation might be stickier. You know what? And this might have to stay a little higher for a little longer. Where are we with the 10-2s? Still above zero. Dollar index. Paying very close attention now to yesterday's high. Yesterday's high is very key because we could turn, it's not a setup I talk about a lot, but it's what I call an ice cream trade. So, well, this would be the inverse ice cream trade. It looks like your ice cream, the top of your ice cream scoop fell on the floor. Imagine a little, here would be the cone up here, upside down. Here's the ice cream scoop. So I'm paying very close attention to yesterday's high now. Crude. coming down to very, very, very key support, but there's not a great setup yet. We'll be paying attention if we do close with the percent B being negative. We'll then be watching for a potential bounce play, but the first key target area for me would be just below 73. So don't know if reward to risk will work. Other than that, there is not a great setup yet. You see it spiked higher based off the OPEC stuff potential earlier, but now it's back down. There is a lot of selling pressure still in crude. Gold, holding the rotation zone, trying to put in a little mini base here, little mini double. So I'll be keeping an eye on that, but that's a bounce play only. Now, there's no long-term sell pattern yet, but this is getting more into a potential, bigger pullback to set up potentially a bigger topping pattern on a longer-term basis, but not there yet. You can see this little mini double, which would be for a bounce play only. Rich will buy crude at 67. Well, so will they better be buying it for the SPR. They should be backing up the SPR truck. It better be selling or buying options to higher implied volatility, especially on spikes with implied volatility, whether it be in the stocks or in the broad market. For hedging, I would look to sell or take advantage of anything that you can harvest Vega off of. So as volatility spikes, I'd be looking, and a lot of people do not like to sell naked, so set up spreads that give you, when volatility comes back in, all right, not only can you take advantage of the hedge you set, the directional hedge you set up, you can also take advantage of volatility coming back in. So that's what you want to have set up. So take advantage of things that sell volatility, and you can spread it off. Oh, we should see the duck falling soon. Why is that? Because it smells like pumpkin spice? Downwind of the McCormick in Baltimore County. So there you go. There you go. Fantastic. All right. The yen. Nothing yet with the good old yenster. We'll sit up and take notice again with yesterday's topping out at the rotation zone and rotating down. This rotation will not take the potential double yet off the table. But yesterday's high is very key. Looks like the yen's trying to consolidate down here. What else do we have? The Ethereum, still trying to get back down to that first target area. We still have the longest bearish term pattern on Ethereum. The spiders, closing below Wednesday's lows, as I talked about. Still, same thing as the S&P. We'll be watching for any bounce plays. Right now, very key support is this 547 area. Resistance now is 555, 554.70 to about 555. So, the Qs, let me flip this around. Remember, the Qs did put it in double top territory from the Qs perspective, but a long way I saw from triggering. The major support I'm looking at for the Qs, we still have gaps left behind from the run up, but the first target back to the downside is 454.50. Right in front of that is a key gap open from the 13th at 455.82. So the next target area to downside would be 454.50 to 482. Resistance is now 471. NVIDIA, come on, there we go. NVIDIA, since we have not technically invalidated the upside 87.5, but if it closes below 105.90 today, it's pretty much, I'm watching, even as it is now, for this to return to the 200, this $90 mark. So I will be watching for rollover plays. I think we have had peak AI in, and so like anything AI related, I'll be watching for rollover plays now. The magnet price, which we have not reconnected since back in January 23 with the 200, be shocked if we did not reconnect with the 200 here, and possibly then after a bounce trigger the massive double top. Still on a weekly basis, the key level is this 50-week EMA right around the lows from August. So pay attention to that in NVIDIA. Got a lot of magnets around that $90 price point. So, and you already mentioned earlier, Intel. Yeah, I mean, you know what? We could easily get back to $12 in Intel. I'd actually like $12 in Intel. Because then watch for some long-term, Intel is not going to go out of business. Its liquidation value is more than $12 a share. But look at that. You want to talk about something, we talk about Cisco all the time. Look at it, even Intel. .com peaks. You were up at highs, it's around 75. You didn't even get back there. At these tops, you didn't get back to 75. So if you had bought at the .com peaks and decided to hold this to get back to break even, you're still waiting. Another example, even if you bought the recent peaks, from March of 20 and May of 21 area or April 21, you're going to be waiting a very long time. And here's what I was talking about. Once it lost this, once this gave up, remember they slashed dividends, and once that gave up, I'm no longer interested in looking at until we get a major bottoming pattern. So that's where on individual stocks, things always just don't go up. Things can take a long time to recover. On broad markets, they can even take a long time to recover, but the natural tendency, since it's an index, companies can fall, new companies get brought in, the old companies that aren't doing anything fall out. So the index has a natural upwards trajectory. Okay, but still remember, once you can get the bigger pullbacks, it's why just buying every dip, from the peaks, how long did it take? From the peaks of the .com. Look at this. In March, April 2000, it took to return to those peaks until October of 15. It took until 2015. That's a real long time if you were buying every dip. Not saying there were some great buys, especially after the bottoms of these 09s. There were some fantastic buy areas. So you still get to be strategic. Instead of just saying blindly buy the dip, just buy the dip. Which dip? Wait for setups. And we'll get some of these bigger pullbacks again. And then there'll be fantastic long-term buying opportunities. Fantastics. But these market valuations be patient. We need some pullbacks. Look at this. Schiller PE, we're still with yesterday's pullback, 35.55. This could easily even pull back to, this 23 area. That wouldn't technically be cheap, but it would be cheaper. And with earnings, companies aren't expanding earnings right now rapidly. So the PE, how's the only way it can drop? Through price drops. Unless we have some miraculous soft landing and then everything revs back up and goes into high gear again, which, yes, if that were to happen, you know what, price could, or if companies say, hey, we're going to start bumping up earnings quarter over quarter, the PE can come down because the earnings are getting stronger. But if price keeps going and even with a bump up earnings, it stays an expensive market. So the long-term risks are to the downside, in my view. Let's take a look at the S&P in the open. Little bounce there into the open. Let's take a look at the tick. Not a very neutral tick. So we just had some buying pressure into the open, but I would be watching. If it cannot sustain above 55.28, if it can sustain above 55.28 and you start getting some decent tick readings, I'd be looking for a little pullback plays with bounces. If it cannot stay above 55.28, then I'd be looking for choppy to rollover. That's personally just based off my quick opening take. Boeing got wrecked again yesterday. Looks like it's trying to lose major support. Thoughts? Hey, Charles. Let's take a look at Boeing. Yeah, it's really, let's take a look at the longer term. It's really flirting. Boeing is so mismanaged too. Boeing is definitely sell the rallies to me. Any bounces. But this is going to be a very key week for closing basis. Very key. It's trading below daily key. Besides this little spike low on a closing basis, look at this. Look at on the closing basis. The lowest close was here from the 7th. And it closed below the lowest close yesterday. That is a very strong warning sign for me. So I would be looking for rollover plays in Boeing. And then if you get a weekly close below the lows, when you get the weekly close below the lows of April of this year, watch out. That you're into a clear path move. There's a little advanced section of clear path move, but there's a pretty decent clear path move, and Boeing could easily return to this 120 area. Easily. And you've technically also, remember, closed below the 62.5. And it bounced back to that 50% harmonic, but got price rejected there multiple times. And this bounce was not anywhere close to enough to reset the 87.5 rule. So you still have the magnet price of 132. I mean, if you get down there, it's probably I can't say it's a no-brainer, but it's probably, from my perspective, the market will want to then gravitate towards these key lows from May and October of 22. But that is an ugly, ugly chart. Incredibly mismanaged company. It's another one. You have some really pathetic management in Boeing. You have some really pathetic management in Intel. And until that's rectified, not gonna, from a fundamental perspective, not gonna make a difference. So All right, peek back the S&P, and then we'll call it a day. So still holding above this 55.28 area. So as long as with the tick drops, that's what I'm going to be watching to see if that holds. All right, with that, I hope everyone has a wonderful day, and I shall talk to everyone later. Bye for now.